The Iranian parliament has now approved the nuclear deal bill, and the US has given the go-ahead for conditional sanction waivers. Implementation date is expected to be the first quarter of 2016, and investors will be watching what happens with interest. But according to solicitor Guy Martin, the Persian state should be approached with caution. Guy joins me now. Now, Guy, many analysts have said that Iran poses huge opportunities, in fact, once-in-a-lifetime opportunities to investors. Do you agree?
Yes, there are, for the reasons that obviously there are fantastic natural gas and oil reserves in Iran, and also there is a highly developed infrastructure. Well, on the other hand, I think there are several reasons for investors to be wary. For example, the fact that as the Joint Comprehensive Plan of Action proceeds and there's the dismantling step by step of the Iranian nuclear arrangements, there is the possibility of sanctions being reimposed in that process. The second point is that there is an uncompleted transition to a market economy in Iran. Iran has bilateral investment treaties, but not with every important Western country, and I think that's another point that needs to be addressed.
Well, what do investors really need to be aware of? I want to start with snapback provisions. What exactly are these?
Yes. If one of the Western countries feels that Iran hasn't complied with its side of the bargain, then there are provisions under the agreement of July that allow that country to bring the matter up before the various boards and commissions under the agreement to see what can be done about it. And in theory, it is possible that sanctions could then be reimposed.
Well, I think a lot of investors going into this are probably working on the assumption that Iran's gone through so much, sanctions have been pretty detrimental on the country's economy, that it's not really going to go back on its word. But if it did and sanctions were reimposed, where would this leave investors?
There are a few sentences in the agreement of July which would seem to indicate that the position of those investors would be protected, but I think that would need to be looked at extremely carefully. And I think it would really be up to investors to make their own sort of due diligence decision beforehand on whether there was a real risk of that happening.
There are, of course, also few bilateral trade agreements in place with Iran. For example, the UK doesn't have one at present. So where does that leave business moving forwards?
Iran has something called a Foreign Investment Protection Act, which is a local, as it were, law that protects investors. The remedy of an investor would have to be before the Iranian court. A lot of sophisticated Western investors might not be too happy about having their dispute tried in front of an Iranian court. The advantage of the other option is called the Bilateral Investment Treaty, and the advantage of the Bilateral Investment Treaty is that it is a mechanism whereby an investor from one state which invests in a country like, for example, Iran, then has the protection of being able to refer a dispute to arbitration, and that arbitration would be not anything to do with the Iranian courts.
So do you think the Iranian Revolutionary Guard Corps poses issues moving forward?
One of the things I found when I was in Iran was that, rather counterintuitively, the Iranians seem to be very, very keen on privatisation. Now, as you know, we've in the UK have been privatising since the days of Mrs. Thatcher in the early 1980s. And you would have thought, given the political background to Iran and the support that it's had from Russia, that privatisation would be not something that they are interested in or have historically been interested in. In fact, quite to the contrary. They have embraced privatisation and they are very keen, at least on paper, to promote privatisation. Since 2004, there have been changes in Iranian laws and reforms that allow privatisation. Sometimes what has happened is that businesses and government functions have been transferred into companies, and it's rather difficult to really get behind the opaque shareholding structure. So you sometimes find, and there is a risk, I think, that some of these shareholders, while on the face of it they may look like independent parties, in fact are nominees, or they are entities which are very, very closely related to the National Guard. And I think there should be a great wariness of Western investors having anything to do with companies like that.
So finally, for people who are interested in investing in Iran, how should they approach this?
I think they have to do a lot of groundwork. They have to really investigate fully the entities and or companies that they're trying to do business with. They have to maybe get some advice on the ground in Iran as to who are the entities and who are the real shareholders. Then they have to take advice about snapback and BITs and so on. And then if, having done all of that due diligence, they decide that it is something that they want to go ahead and do, then I think that should be supported.